Most people staring at the crypto markets right now are obsessed with ETFs and retail sentiment, but they are completely missing the single biggest hidden in plain sight story in all of finance today. What if I told you there is a publicly traded company that has quietly cornered 4.7% of the entire global supply of Ethereum? To put that in perspective, if Ethereum is the world computer, this company owns nearly 1/20th of the whole machine. Today, we're breaking down BitMine Immersion Technologies, ticker BMNR, and answering the question on everyone's mind. Is this quietly becoming the next MicroStrategy? Because there's a 154% surprise buried in this analysis that almost nobody is talking about. And by the end of this video, you'll understand exactly why. If you're into finding these overlooked opportunities before Wall Street catches on, do me a quick favor and hit that like and subscribe button right now. It genuinely helps the channel out. Now, let's get into it. Most investors still file BitMine away as just another struggling Bitcoin miner drowning in energy costs. But the data, as of today, tells a story that is far more ambitious and, frankly, far more lucrative than anyone realizes. So what happens when you actually look inside the vault they've built? We are looking at the world's largest listed Ethereum treasury. BMNR has evolved from a pure play miner into a sophisticated ETH accumulation vehicle, holding 5.67 million tokens, with total holdings valued at $10.7 billion, including Bitcoin and cash. BMNR is now the #2 global corporate crypto treasury, trailing only the legendary MicroStrategy. Chairman Tom Lee refers to this strategy as the alchemy of 5%. It's a deliberate mandate to corner a dominant portion of the Ethereum network before institutional demand hits its absolute peak. But it isn't just about what they own. It's about who is being forced to buy into this narrative right now. And that brings us to a massive catalyst that just went live. BMNR was officially added to the Russell 3000 and Russell 1000 indices. In the world of institutional finance, this is the equivalent of a forced marriage. Billions of dollars in passive fund inflows from pension plans and 401k accounts are now effectively required to hold BMNR shares to track these benchmarks. This creates a permanent floor of demand that simply did not exist a month ago. We aren't just talking about diamond hands retail traders anymore. We're talking about the bedrock of the global financial system being nudged into owning a piece of this Ethereum treasury. But here's the thing. Did the smart money really wait around for an index to tell them what to do? Take a look at this roster of backers. Cathie Wood's ARK Invest, Bank of America, the Royal Bank of Canada, and Peter Thiel's Founders Fund. These are not speculative moonbag gamblers. These are the architects of the next financial era. BMNR has even deepened its roots by co-founding Eth Labs alongside Ethereum co-founder Joe Lubin. This isn't just a company sitting on an asset. They are actively building the infrastructure to accelerate the very institutional adoption that makes their own holdings more valuable. Now, you might be asking yourself a very reasonable question. How on earth does a mid-cap company afford $10 billion in Ethereum without drowning in debt? Here's where the story gets more complicated, and where most amateur analysts get it dead wrong. BMNR recently raised $273,800,000 through a 9.5% Series A preferred stock offering, ticker BMMP. On the surface, 9.5% sounds like a heavy weight to carry. But this is where the alchemy actually happens. BMNR has staked 4.72 million of their Ethereum tokens through their Maven platform, the Made in America validator network. This staking is generating somewhere between $223 million and $268 million in annualized revenue. That cash flow doesn't just help, it fully offsets the dividend obligations on the preferred stock. It is essentially zero net cost leverage. And honestly, that alone is a masterstroke of capital allocation. But would you believe it's not even the only hidden treasure sitting on their balance sheet? While the entire market is hypnotized by the crypto, BMNR is quietly sitting on moonshot venture stakes that the public markets are currently valuing at almost nothing. They hold a $104 million stake in 8Co, which provides indirect exposure to OpenAI. Let that sink in for a second. An Ethereum powerhouse with a side bet on the leaders of the entire AI revolution. Then add a $180 million stake in Beast Industries, the business empire of Mr. Beast, and suddenly you realize BMNR isn't just a miner. It's a diversified technology powerhouse hiding in plain sight. But if the assets are this incredible, then why on earth is the stock price sitting where it is? This, my friends, is the disconnection of a lifetime. As of our recording, BMNR is trading around $13.56. However, when you tally up the liquid coins, the cash, and the venture stakes, the net asset value comes out to somewhere between $17.22 and $18.79 per share. That is roughly a 21% discount. You are literally buying Ethereum for 79 cents on the dollar and getting the liquid cooling business and the AI stakes thrown in for free. This kind of arbitrage rarely survives for long in an efficient market, especially with Wall Street watching this closely. And Wall Street isn't just watching. Are they actually about to set targets this aggressive? Wall Street's consensus rating sits at a moderate buy, but the numbers tell a far more bullish story. The consensus price target is $34.50. From the current price, that represents a staggering 154.3% upside. Even the high-end estimates are pushing toward $37.33. When professional analysts are openly calling for a move of this size, you have to examine the technical structure to see if this coiled spring is finally ready to snap. But before you even think about jumping in, we have to address the elephant in the room on the technical chart. Technically, the stock has been stuck in a death cross since the start of the year, a lagging indicator that tends to scare off nervous retail traders. But look, closer at the demand zone. We are currently sitting on a triple-tested floor between $13 and $15. Despite a sharp 28% drawdown caused by a dip in Ethereum spot prices, BMNR has defended this level like a fortress. And here's the rule in technical analysis. The more times a support level is tested and holds, the stronger the eventual bounce tends to be. And that bounce? It could be violently accelerated by a massive group of investors currently standing on the wrong side of this trade. There are currently 26.5 million shares sold short, roughly 4.7% of the float. Now, 0.94 days to cover might seem low at first glance, but with the stock pinned at these multi-test lows, any sudden rally in Ethereum could trigger a violent short squeeze. The shorts are crowded at these levels, and when the Russell Index buying starts to exert real pressure, you could see a genuine scramble for the exit that sends this price absolutely vertical. So what is the smart money's options data whispering about the days ahead? Looking at the recent option chain, we see a massive concentration of volume in the $14 and $14.50 calls. This tells us traders are betting heavily on a recovery back toward the $15 level. Meanwhile, the high open interest at the $15 put is acting like a magnet. In market maker terms, this often creates a psychological floor that the price gravitates toward right before a breakout. So when you stitch all of this together, what does the actual trade setup look like? The setup is crystal clear. We're looking for an entry in the consolidation zone between $13.50 and $13.60. Our primary bullish target is $17.40, which would reclaim the 20-day exponential moving average. We have a firm support floor at $13 even, and a deeper disaster floor between $12.38 and $12.94, based on the 52-week lows. But there's a world of difference between a quick trade and a real investment, isn't there? If you're a short-term swing trader, your play is simple. Buy near $13.50, target $15.50 for a quick 15% gain, and keep a tight stop at $12.50. You're playing the oversold bounce and the post-Russell inclusion recovery. But for the long-term investor, the strategy is even more compelling. You accumulate everything under $17 and hold for that $34.50 Wall Street target. You're betting on the alchemy of 5% and Ethereum's growing role in the future of AI and tokenization. Which brings us to the final, lingering question. Why is this such a compelling strong buy right now? The verdict is that BMNR looks like a coiled spring. You are buying 5% of the entire Ethereum network at a 21% discount to its market value. By picking up the stock at these levels, you are essentially receiving the liquid cooling business, the Maven staking platform, and the stakes in OpenAI and Mr. Beast for $0. In any other sector on Earth, a company trading at this kind of discount to its liquid assets would become an immediate acquisition target. Now, before we wrap up, I need to be completely clear with you. Everything in this video is for educational and informational purposes only, and it is absolutely not financial advice. I am not a licensed financial advisor, and the stock market carries real risk. You can lose money, including your entire investment. Crypto-related equities like this one are especially volatile. Please, always do your own research and consult a qualified financial professional before making any investment decision. With that said, here's my final take. BitMine Immersion Technologies has transformed from a humble miner into a genuine strategic titan. With the Russell inclusion now active, the NAV discount potentially closing, and institutional backing from the likes of ARK and Peter Thiel, the risk-to-reward profile here looks remarkably asymmetric. Whether you're hunting for a short-term squeeze or a long-term cornerstone for your crypto equity portfolio, this is a rare chance to front-run the institutions. The alchemy is working. You just have to decide whether you want to be part of the transformation. So now I want to hear from you. If BMNR really is trading at a 21% discount to its assets, why do you think Wall Street hasn't closed that gap already? Is the market simply asleep? Or does it know something we don't? Drop your honest take in the comments below, because I read every single one. And if this breakdown gave you a fresh perspective, smash that like button and subscribe so you never miss the next hidden opportunity before the crowd catches on. Thanks for watching, and I'll see you in the next one.